Hey traders, how you doing today? Today's lesson I'd like to go over why no indicators are needed. I'm gonna have to go kind of fast because I want to go over 3 different indicators and price action. A SMTM trader uses price action here along with multi-time frames, and this is all the information we need to make decisions. As you see these lines right here, these are what we use. These are called SMTM lines. These lines show us areas of SMTM. That's areas that buyers have showed us the money before, and we use those in combination with multi-time frames. So first what I'm going to go over, I'm going to read this using price action, and then I'm going to read this using indicators to see if the indicators gave me any new data. As you can see, prices rallied down to an area of SMTM. As prices came down, this area looked good right here. So this is what I could like to call a pretty move down, and based on this move, a lot of novices see this and their first thing is thinking short, but not thinking that this move in combination with support and resistance came to an area of show me the money, and at this point the move was completed. And so as you see this big selling bar right here, this bar in this area of SMTM shows me it's a lot of accumulation right here. This is not an event that I would consider just going long, but this gives me pause to say, hey, not short. As you can see, it was completely reversed by this, what I call an MRB. There was a major reversal bar. So this bar is completely reversed by MRB, and some traders went short here and they might have got that scalp, but then they missed the bigger play. And so based on this pattern right here in this area of SMTM tells me that accumulation is here and buyers could be stepping up. So when this came down here and at this point buyers stepped up, I see this volume increased on this green bar with this pattern, call it a retest and fail pattern. It tested this prior pivot and failed to go down, so it went up. And so at this point prices came to this area of this pivot here, of this prior pivot, and it consolidated here. Now to a trader, as it went up, and when this red bar came in, this was a buying opportunity. Some traders might have thought this pivot here was an area to short, but based on this pattern in conjunction with the higher time frame and this SMTM area, we see that in the lower time frame this is a buying opportunity. And so at this point we would be looking to go long. And so as prices went up, I'm gonna need to mark a few areas first. These areas I just marked are areas of supply and demand. Right here, this created an area of supply and demand. So as prices went up, after they reacted to this pivot, they went up here and they reacted to this area of supply and demand. And as prices went up again, we had another area of supply and demand where prices halted at this point and tried to make an attempt to go down, so it had a reaction over here. Note, when trading with the higher time frames, momentum and price pattern, areas of supply and demand and other subjective indicators, those are usually just speed bumps in the rolls. Those can cause prices to correct. We don't know how deep the correction, but usually they don't cause prices to form a different trend. Areas of SMTM areas usually have the ability, when these are in alignment with the higher time frame, they can cause prices to revert and continue a different trend. So it can be enough sellers or buyers there to push prices to form a different trend, to start a new move. So taking note, we have a bounce from this area, so when we hit these areas of supply and demand, we will keep a bullish bias still. So it comes to these areas and it forms supply and demand. As we came up to this area right here of this SMTM line, the higher time frames pattern gave us another MRB, and so with that the odds favor, we don't know, but the odds favor us breaking through this area. But we did have a red bar here, some type of reaction. As we went up here to the next SMTM area, which is in alignment with the higher time frame, this bar, this price pattern indicated it was a lot of selling pressure here. And so as prices consolidated, it's trying to absorb the supply that's here. If it successfully absorbs the supply, then price will continue to go higher. If not, then they will fall. But at this point, it's trading within the range of this big bar here. Okay, I'm gonna have to move swiftly through this. I only have 5 minutes left. I'm gonna do 3 indicators. The first indicator is trader pivots. I'm sure a lot of you heard of those. So we want to see if these trader pivots gave us any new information. Right here we have this trader pivot, but it's already in the area of SMTM and it formed this pattern. So this didn't give us any new information, and based on this pattern at this area we were bullish. So when price went up to this area, we're not thinking about shorting here. So at this other trader pivot area, prices did consolidate a little bit, but it was at an area of supply and demand. So did this give me any new information? No. So actually prices came up again. There's no trader pivot here, but we still have an area of supply and demand, and we had some reaction here, and based on this reaction, this gave us pause by seeing the supply and demand that, hey, it could be sellers in here to note. Now as prices came back down, what happened here? As you see, when prices reacted to this supply and demand, it created a new area of supply and demand here, and prices pulled back to this new area of supply and demand, and buyers were in here and they stepped up at that area, and so prices continued to go higher. So these speed bumps in the road slowed prices down. This supply and demand area in alignment with the trend allowed prices for buyers to step again to a new point. At this SMTM line, we were able to get one red bar out of it, and here, this area right here was pretty much really ignored. Just some selling pressure here, but this trader pivot didn't give us any new data at all. And when we got here at an SMTM line, at least we had enough sellers to get a red bar, but not at this area. When we got up to this trader pivot area in alignment with this, then as you can see, we had this major reversal bar. So just as supply and demand trader pivots, if you're trading in a direction of the higher time frames momentum and price pattern and your current time frames trend, then these usually just halt prices. These usually don't have the ability to cause prices to rally or enough sellers there to cause a current trend change. So if you're hiding behind the SMTM area, then you should be fine. These in alignment with the SMTM areas can cause damage. Okay, I plotted 3 moving averages. I have the 200, which is red. This is the 30, this light blue, and this dark blue is the 20. As we come here, you see prices were moving down. We see these MAs, they were trending down. As they were trending down and it came up here, I'm not thinking short at this point because this MA is trending down. Price pattern off this SMT area made me think bullish. So we're not even thinking about that. So as we come here, we come up to this, so these two MAs pretty much didn't help us at all. We come up to the 200 period. Yeah, it is selling pressure. Did it give us anything new? No, because we already had supply and demand here. So this, I didn't need this noise on my screen. It reacted to supply and demand, but it didn't cause a trend change, and so prices start trending up with these moving averages here. So by the time it pulls back to this moving average, am I thinking about long at this point, waiting for this moving average? No, I'm already looking to be selling some of my position. As I move along, I don't have a lot of time left here. I did the Fibonacci here. This is the high, this is the low. This is the 30% area, the 40% area, and or the 50% area and the 60% area. Not exact, but just that area. And as you see, prices came up here to this 30% area. It consolidated a little bit. I'm not thinking about short here. And as it consolidated here, this was an area of a pivot, so it didn't tell me anything new. As we get up to this 50% area, supply and demand, here I'm not shorting at the 50% area because this price pattern told me bullish, but we had some reaction, nothing new, supply and demand. We come to the 60% area of Fibonacci, supply and demand, nothing new, not a shorting opportunity for us. We know supply and demand is just it's just a speed bump in the road, so not for us to change our bias. But some people using Fibonacci might have changed their bias to go short. And as we get to the 100% area, there is some simple type of reaction, but using multi-time frames, we know that this area is not as significant. Not saying you use all these indicators, but that these indicators tell us any new information that price couldn't tell us. So this is really just all noise on the screen. If you truly focus on reading price and what counts, which is derived from all of these, that'll keep trading very simple. And that's what happens when you keep trading simple. That allows us to focus. If it's some particular point on here, the prices will form us a reversal bar or something to tell us that, hey, it's a roadblock in the road. But I'm out of time, traders. Talk to you next time.